Premier Media's Mining Weekly Online is talking to Paul Miller, the Managing Director of mining venture capital company CCP 12J, a company established to assist companies to benefit from the incentives enshrined in Section 12J of South Africa's Income Tax Act. Paul, can you tell us what strategy CCP is going to adopt to make sure that people can benefit from this tax incentive?
Well, the tax incentive is very significant, but any fund needs both the tax incentive to attract the retail investor. It also needs a compelling investment case. Now, in 12J of the Income Tax Act, there's a particular carve-out for mineral exploration and production. And that's very significant for us because it allows us to build scale. We can make investments of up to 500 million rand in mining projects. Now, what we're not looking to do is to take retail investors' money and put it into highly speculative initiatives in the mining industry. What we're looking to do is to pursue those secondary and ancillary projects on existing mine sites in partnership with major mining companies, looking to reprocess tailings, repurpose mine dumps, brownfields expansions. You know, there's a huge amount of engineering, mining engineering, minerals processing engineering that's required all the time on existing mine sites. I think it's important to note that we have a very, very significant mining industry. You can argue as to whether it's mature, whether it's going to grow, whether it's in decline. The fact is, for our remaining careers, we're going to have a very significant mining industry with very significant capital requirements. It's those capital requirements that we're looking to meet on existing mines, and we're looking to do that by using the tax incentive being provided to particularly high net worth individuals to invest in these projects.
And how much have you raised so far? And what is your target capital amount?
So we're a startup. We registered got our SARS certificate from the Revenue Service only on the 8th of February. Before the end of February, we had raised 44 million rand from third parties. It was a soft launch. We didn't have a lot of time or effort at the time. We've also got a commitment from DRA, South Africa's biggest mining engineering firm, which is the commitment from them is to provide 150 million rand of financing. So collectively, we've got 194, but we're going all out to raise money now in August ahead of the provisional tax payment dates, and then our big raising will be in February next year.
And how generous is this incentive, the 12J?
It's extraordinary. If you invest in our fund, 12J, CCP 12J, you can write off the full amount of your investment against your taxable income. If you're a marginal taxpayer at 45%, that's equivalent to a 45% subsidy, a 45% buffer on your investment.
So the return on investment that you're going into, the area you're going into is not a high-risk area. So you can't really expect great returns. So how does this incentive boost the situation?
Well, it's a very good point. So you're right. We're looking to preserve our investors' capital. We're looking to lay off risks like commodity price. We're not particularly interested in taking underground mining risk. We're not looking at taking a geological risk. What we're looking at getting is an appropriate risk-adjusted return and then taking advantage of the arbitrage provided by the tax incentive to return a higher rate to our investors in the early 20% IRR type range.
And how would this compare to, say, the flow-through scheme that we have or that exists in Canada?
I think the biggest difference, and this is the venture capital company regime of 12J in South Africa is akin to the venture capital trust regime in the UK. And I think that might have been what it was modeled on. The flow-through shares scheme in Canada is a little bit different in that it fundamentally relies on public markets. So it's listed juniors attracting attracting investors who can then write that off against their tax. And it's very, very supportive of open public markets. It seems our regulator in South Africa, the National Treasury, doesn't like investors owning liquid public market shares, and all initiatives that they've taken, for example, the tax-free savings accounts or venture capital companies under 12J, are precluded from either investors managing their own money in listed shares or venture capital companies themselves ultimately being listed. So there's a difference. These tax incentives in South Africa do not have the secondary objective of developing our public markets. Whereas in Canada, flow-through shares have been very much part of why the TSX, the Toronto Stock Exchange, has more listed mining companies than any other stock exchange in the world.
And who are the owners of CCP 12J?
Well, it's interesting. The way it's structured is that no one shareholder can own more than 20% of the fund. So it's meant to be public investors. We already have 63, but the management company, the genesis of CCP 12J and the management company is out of Stockdale Street, which is a private equity fund manager of the Oppenheimer family interests in South Africa, combined with DRA, the engineering firm, our principal investor and technical partner, who came together to put together CCP 12J. And it was those two teams that put it together, and then I was approached to come in and work full-time, concentrating only on CCP.
And a lot of people are saying, we've reached a stage where stay in business investment has become important. We've got plant that we need to upgrade. There's new technology. How can CCP 12J's fund assist?
Well, that's exactly what we're looking for, right? So we're looking for opportunities where there's a brownfield expansion or a new circuit that's required, some sort of additional treatment circuit or crushing circuit, or where there's a mine might be producing more than the plant can handle, and you want to expand it, and there's a modular addition. Those are the sorts of things we're looking for. Very much minerals processing rather than underground mining or open pit mining itself. And that's the particular advantage we have with DRA, in that they have sight of a magnificent pipeline of projects coming out of the major mining companies. Now, we're looking for 750 million rand. That would be a success for us. We would obviously like to raise more, but even if we raise a billion or 2 billion, relative to the sustaining capital requirements of the South African industry, it's actually quite small.
And just explain to me, if I had deep pockets and I wanted to invest in this fund, how would the benefit accrue to me? How does it flow through to me?
It's quite simple, actually. If you were, for example, had taxable income of R1 million in a year, if you invested in us, it would be deducted, that R1 million, it would be deducted from your taxable income, and you would not pay tax that year. If you had already paid tax, you would get a tax refund for the full amount. You would subscribe for shares in CCP 12J Fund Limited. We would then issue you with a tax certificate. If you're familiar at all with the e-filing form that everyone fills in, there's actually a section there. You click a box, have you invested in a venture capital company, and then it asks for the details of the certificate. So we would issue you with a share certificate and issue you with a tax certificate, and you claim it on your e-filing form.
So it sounds quite attractive.
It's very attractive. Look, to be clear, we are looking to recruit investors who are properly advised. This investment has to be held for at least 5 years. An investor should be prepared to hold it for between 5 and 7 years. So we're not looking for investors who might require liquidity in that period. So we want some investors who pay the marginal tax rate, so they are significant earners, who have funded their pension fund, who have put aside money offshore, and then are looking to manage down their tax obligations. And that's what we're looking for. So it's a very specific investor, and we would prefer for our investors to actually consult with a financial advisor and get proper advice so that we get the right kind of investor into our fund.
It was Creamer Media's Mining Weekly Online, speaking to Paul Miller, the managing director of the mining venture capital company, CCP 12J.